Joining us to discuss the volatility and the prospects for long-term growth is Fidelity's Tom Jessop. Tom, welcome back. It's good to see you. I wonder what you made of the decline in May and whether or not you think we're in an area here in the mid-30s that can be sustained for a while.
Yeah, it's a great question, Carl. So I think these sort of boom-bust cycles are part of the maturation of Bitcoin as an asset class. If we look throughout history, we've had fairly significant drawdowns, north of 30% over the life of the asset. I think what happened is we had some leverage-driven excess build up in the market. If you look at some of the open interest on the Asian futures exchanges going into sort of the mid-month correction, in some cases we touched close to $30 billion worth of leverage, driving prices higher. And in many cases, these investors could trade on 50 to 100 times leverage. Having said that, what we've seen in the subsequent weeks is that leverage has come down significantly, in some cases by 2/3. And typically this is a cleansing process that we've seen before in this asset. And hopefully with a little bit of basing here and some positive news flow, we'll see things start to stabilize.
Right. I wonder if you can sort of describe qualitatively the way in which Fidelity clients see the asset. I mean, is it really a hedge against inflation? Do they see it as promise of a payment mechanism over time? Is it just a way to diversify your overall portfolio in general, or some mix of those three?
It's a mix. I would say the predominant narrative at this point is still the digital gold narrative, which really started driving the market higher about a year ago after the pandemic. And so there are a number of clients that are concerned about fiscal and monetary stimulus, monetary inflation, and they see a scarce digital asset like Bitcoin specifically being an important part of that thesis. I think there's a smaller number of investors starting to look at this from an asset allocation standpoint, given the different set of fundamental drivers for the asset class and the lack of correlation, at least over longer periods of time. There's a more traditional element of asset allocation coming into the mix as well. And then there's a third bucket where people look at this as a network effect opportunity, the same way you see growth in platforms on top of the internet like Facebook, Google, Twitter. Owning Bitcoin is effectively a long-dated call option on use of the asset or the technology as a means of payment.
So, Tom, does that mean that if you say have your 401k with Fidelity or invested in another type of fund, that anybody could basically have some sort of exposure to Bitcoin or other cryptocurrencies through your platform if they wanted it?
Now, we are strictly focused on institutional clients, so we do not serve retail investors by design. But certainly many of our institutions that are allocating to this asset class have consumers and other types of investors that they service.
Shepard Smith here. Thanks for watching CNBC on YouTube.